Good afternoon, Alpha Group. How y'all doing today?
Doing great.
Dude, glad to be with you guys. We've had a lot of opportunities to learn lessons this week, right? A lot of opportunities to become a better trader. Let's think of it that way, right? What you're going through right now is going to set you up for success in the future. And I can guarantee you, not one US investing champion has ever gone through the year without a losing streak. Not ever once. Because of that, you have to build that into your plan. And we do that by trading risk first, right? Sizing based on risk, making sure that you understand when you put your money in the market, it is at risk. There is never a time when your money is not at risk in the market. Because what I like to say, all stocks are bad, but every once in a while they act right. And then every once in a while, they act like we've been having to deal with right now, where a bunch of them are deciding, you know what, I don't want to act right either. Now, this is a little pro tip. We're going to put this right at the beginning here. This is a little pro tip. So we're going to talk more about Mark Minervini, one of my mentors, two-time U.S. investing champion. That's what I meant to say. And one of the market wizards. One thing that Mark told me specifically is when you start having several trades in a row that aren't working, take a step back because the market is probably telling you something's happening that you're not seeing, right? And that's where we're at right now. I'm not calling for a crash, but what I'm saying is because I'm respecting my losses, because I'm respecting my plan, I'm finding less and less and less opportunities. And to me, that kind of signals that we may be looking at a bigger pullback here, especially with trades aren't working out the way that we want them to. That's part of the game. Right, you've got to build that into it, right? It is so fun, and I'm actually really glad that this happened in alpha class, right? We got to see these big wins, we got to be all excited, we got to see what it's like to ride that high. But now we're on the other side of it, right? What are you going to do? Are you gonna be scared, right? Are you going to, say, this guy Chris is just a scam artist? Why can't he be like every other guy on YouTube who only has winning trades? I mean, the reality is that I actually do trade money, right? I do trade big money all the time. Because this is my literal job, right? Making YouTube videos and trading stocks. And I'm really good at both of those. But it took me like 6 years to figure it out on YouTube. I figured that out a little earlier on trading stocks, but that's okay. Listen, guys, I'm so glad that you're here. Let's jump right into today's lesson. And let me introduce myself. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009. And this is where outliers like us save time, make money, and start winning with less risk together as a team. So if that sounds good to you, go ahead and subscribe if you haven't already. Today's lesson, we're going to go through a lot. We're going to go through different areas. We're going to go through first, how to set up your charts like a pro. Next, we're going to go through risk management and how important that is. And lastly, we're going to talk about adjusting the plan, right? Adjusting the plan. Today, I put out on Discord, you know what? Maybe I missed something. Maybe it's me. Right. So I actually I issued a challenge. I parked in the gym parking lot and I was like, you know what? I'm going to issue a challenge to the outliers. Find a way. I don't know if you guys caught the subtext of this. Find a way to show me that I don't know what I'm doing. It's basically what I did. Yeah. Put this out there and say, before the trade was put on, find a way to show me where I'm wrong. Nobody's yet to come up with that. Just putting that out there. Nobody's yet to come up with saying that they could predict the future and say when Chris was going to be right and Chris was going to be wrong. Now, I also tested all kinds of different ideas here. I could not find any circumstance, anything that I could change that didn't yield positive expectancy, right? I kept finding, how about this? Let me try this. Let me try that. Let me try this. Let me try that, right? All of my different iterations still came back with positive expectancy. Well, what if I try this? Still positive. What if I try that? Still positive. Now, that gave me two things. That gave me comfort knowing that, as far as I can tell, I have the best plan that I've ever made at this point in my life. And it gave me a little frustration because I felt, man, I wish I could find something that I could change, right? But I think CMAC got it right there. I have not called Nancy yet. I don't have Nancy on speed dial, unfortunately. But the challenge has been thrown down. Find a way to tell me before it actually happens when my trades weren't going to be set up, right? And I know right? I know Mike's been pretty frustrated lately because it's not gone to plan for him. But that's also part of the game, dude. And I'm sorry that that's happened, but we got to live through that, right? We got to work through this. This is called a drawdown. Everybody goes through drawdowns, even the best traders in the world, right? You're not going to hit new all-time highs every single day, unfortunately, unless you put it in escrow. That's the only way it's going to happen. Joe, what's on your mind?
I'll take any drawdown when I'm still up over 20%. I mean, how are people complaining about this?
Well, Joe, it's because they're not up 2,000%. Okay, I listened to this random guy on the internet, and he has not given me thousands and thousands of percents by now.
Yeah. I see some other folks in the chat talking about they're still up over 43%, for instance. It's just
there you go.
It's amazing. The success of this program is amazing.
All right, so let's go first into chart setups. How to set up your charts like a pro. Now, I love being able to do this with you guys, and a lot of y'all come to here and you're like, oh, how does Chris set up his chart like that? That looks really interesting, right? Well, first off, our friend Deep Thought, who's here live with us, actually created the Deep Thought script where you can have your trades, your screen set up exactly like mine. The colors may be a little different here and there, but that's okay. You can change the colors. And I'm going to show you how to do that, right? You can use the free TradingView accounts with this free indicator, and you have your trades, your screen set up exactly like mine. However, I'm a snob, and I like to add all things in and test all kinds of new stuff. So let me go take off everything. And we're going to build this from scratch. In fact, there's the Deep Thought ones right there. Let me remove those. Okay. So the way that we do this is not all that hard. But you first need to go into our Discord. Once you're in the Discord, actually, let me get a fresh Discord. I don't want to lose those two tabs there. Once you're in our Discord, go over to the TradingView Pine scripts. And that's right here. Once you're in the TradingView Pine scripts, up here in the pinned messages, you're going to see some things that Deep Thought have prepared for you. And one of those is the Deep Thought script. Click this link right here. It says Deep Thought 3.4 indicator. So you click that. Now, this is already in my favorites, but it's going to look like this if it's not. All you have to do is click this little thing here and say add to favorites. Now, this is free. If you are an outlier, you can get this for free in our Discord and use the free TradingView charts to get to this point. Once you're in TradingView, I have nothing enabled. Come over to indicators. Go to your favorites. You're going to see all kinds of other stuff here that I've added. But what we're talking about right now is Deep Thought. Click the Deep Thought. And then it should populate right on the chart for you. Look at that. Look at that. Now, Deep Thought has done a lot more than what I've done. He's actually made all kinds of cool enhancements to it. Now, the way that you can edit that is by double-clicking anything on here. And it'll pull up all of these different settings that you can go change, right? So if you want to make your colors look like mine, you can go make your colors look like mine. In fact, he's also got the risk management table right there, so he can help you see how much you should be trading, what the ATR value is, how many contracts to take. This is a really, really sick indicator. I am super stoked that this is available for all of our outliers. So in the chat,
there is one thing that we do need to mention about that risk table though, Chris.
Let's go for it, Deep Thought.
The position sizing spreadsheet that you have.
Yes.
That works on two underlying calculations. So one of the calculations is for the actual amount of shares that you need to get, which you can then divide by 80 to get your contracts. Mm-hmm. And the other one is for your stop loss position. So that's your total risk. And the relationship between those two values is half ATR to 2 ATR. So it's a 1-to-4 ratio. Now, my script calculates slightly differently. So if you want to get the same position sizing with the same stop loss as the spreadsheet, you need to set your risk percentage to 1/4 of what you would set it to on the position sizing spreadsheet.
So on here?
Yeah. So if you've got, say, 5% normally on your spreadsheet, you'll set it to 1/4 of that value.
Okay.
So
risk percent per trade. So for example, if I'm trading 5%, I need it to be 1/4 of 5%. So 1.25.
Yeah. And then your stop loss multiplier will be set to half, to 0.5.
Okay.
And that'll give you a half stop ATR. And then that is basically the same settings as the spreadsheet.
Excellent. Very cool. Thank you for that additional detail with that Deep Thought. So everybody do me a favor, type in DT in the chat to pay respects to Deep Thought, because he just allowed you
Put 42 in the chat.
for free to have your charts look just like my charts. How cool is that? And actually even better whenever you add in this information over here. So DT is worth every penny. DT is awesome. Thank you so much, Deep Thought, for having created that for us. Is there anything else you'd want to add to that, my friend?
I don't know, a lot of people ask about changing colors and period lengths and stuff for the EMA. So yeah, in your style tab, you can turn on and off whichever one of the EMAs you want. There is a smooth moving average in there for those that like to have a 150 or a 200. So you can change the period right at the top.
Yeah. There's all kinds of cool settings that you can do inside of here. Right?
Yeah, and then also essentially, if you when we do go into a bear market and we want to start buying puts, or then we can change the trade direction. So you see that in the middle it says trade direction long.
Oh, look at that!
Short, and that will
beautiful.
That will flip your ATR levels around.
Very cool. You mean these ATR levels?
Those ATR levels. So
those ATR levels, right?
So
this is what Chris has a little script for that helps him navigate it. Now, of course, Deep Thought, as we know, as time goes on, these ATR levels are not going to be stuck, right? So you're going to have to go through and add a line on top of it, like I do, right? Like that.
Yeah.
Otherwise, whenever you click to turn those off, they're going to disappear. So this is super cool, man. I love what you've done, and I love that it's available for free for all of our outliers. And you are a saint for having done so, my friend. Thank you so much for doing that. Now I'm going to pop that off. I'm going to pop on my 10, my 20, my 50. For those of you who are following along at home, this is what I add. I add the order block with the sensitivity of 28 and an order block with the sensitivity of 50, and then I have my ATR level down at the bottom. Oh, y'all can't see that. I have my ATR levels down here at the bottom. So Deep Thought, you are awesome. And now we have all set our charts up just like mine for free. That sounds pretty good, right? Still looks pretty good. So let's move on from that, right? Now let's talk about living through drawdowns, right? We're going to talk about this in a way that hopefully this will make sense to you, right? Because as we mentioned earlier, we're not going to get a new all-time high in our account every single day. Right. There are days where we're going to stair step higher and higher and higher. That's awesome. But every once in a while, we'll have to take a stair step down. And that is part of the game. Right. If you cannot account for losers, you will not be a part of the game very much longer. JC and I were having a chat about this earlier. And JC, he trains fighters. And he was mentioning earlier, right? Every time you take a loss, it's like getting punched in the chin. Right. Every time you take a loss, it's getting punched in the chin. But you know you're going to get punched in the chin, right? When you enter the ring, right? Right, JC?
Yes, sir. Yes, sir.
So tell us that story again, because I thought it was brilliant.
Well, Chris is a trader, okay, and he's gonna be in the ring, and there's gonna be an audience around him. Some people like him, some people don't. Some people understand what he's doing, combat. Some people are novices. You go in there, I don't care who you are, you're gonna get hit in the face. All right, so maybe getting hit in the face, he accepts it because he knows he's got to get hit a couple of times to draw this guy in and get his timing. And then when the lazy jab comes in, he goes over the right, and that's the big win. So he might get hit 2, 3, 4, 5, 6 times, nothing crazy to land the big one, and which is how he trades. A couple of small losses. Sometimes it's 1, sometimes it's 7 in a row, but he always banks on the big shot. He can't respond to the people in the audience that don't understand it. Those are the people that are, type keyboard warriors, yammy, that make 100 million percentages a year, and they're living in their mom's basement with their scooter. All right, so Chris can't listen to those guys and concentrate on what he's doing. Getting hit in the face is part of combat. If you can't get hit in the face, don't go in the ring. Do kickboxing classes. This is for people who can take that. Period. End of story. Don't pay it no mind. Don't give it no mental real estate, Chris. That's all I say.
Right. And not just for me, but like if you're going through this as well, you're probably struggling. You're probably questioning everything. But this is part of the game, like JC's talking about, right? You can still win the round. You can still win the match. But in the meantime, you're going to get punched in the face a few times, right? Are you going to plan to get punched in the face, right? Are you going to duck and roll? Are you going to put a mouthpiece in? Probably so, because you are anticipating the fact that it's going to happen. Or are you just going to stand there like a punching doll and just get whacked to death, right? You have the choice on how you respond to this. I would choose to have a plan and execute the plan, and then you don't have to worry about anything, right? The plan is freeing. I know that sounds crazy, but by having a plan, I don't stress. I have lost so many trades that I got so used to losing, it doesn't even acknowledge me anymore. I don't even look at it. I have an entire day full of things to do, and one of them is not sit there and brood every time I have a losing trade. So even the best strategy, I want you guys to guess. I haven't shared you the slides yet, so I want you guys here in class to guess. Make sure your mics are unmuted here. Well, raise your hand, I guess is a better way to put it. How often do you think a strategy works, right? In the course of a year, what percentage of time do you feel like any strategy works? Paul.
From what I read from some of the market wizards, or if they're hitting 40%, they're happy.
Gold star.
Winner.
Clear winner right there. Yeah, and it's true, right? Now, what are you going to do the rest of the time? What are you going to do the rest of the time when your strategy is not set up and your strategy is not working? Any guys have an idea?
Cash.
Cash is a good answer.
Yeah.
Ian, what were you going to say?
Risk management.
Risk management. Really good. Deep Thought, would you care to chime in on that one? There we go. Sit in cash and don't F up. Now, it's not just something that I made up. It is a fact. You have unlimited opportunities in the markets to do anything you want. This is Trading in the Zone 101 right here. You can do anything you want in the market. But I would advise you to do like Stocky Locky saying, and sit in cash and don't F up. Because 60% of the time, it's not going to work. And if you're fighting it, you're just asking for trouble. If you're putting on trades that you didn't need to because you are just bored, you're asking for more losses, right? Now, let's talk about losses. Losses work against you geometrically more than winners. So let's conceptualize this. We'll use the former Advanced Money Destroyer with now the Advanced Money Delivering Station right here with AMD, okay? So a 10% loss requires an 11% gain to get back to break even. Somebody hears that. I know you guys have heard it before, and you're like, shrug your shoulders. A 20% loss requires a 25% return to get back to break even. A 50% loss requires a 100% gain to get back even. This is where things start to break. Let's go look at the Advanced Money Destroyer. The Advanced Money Delivering Station. And let's take a look at this, right? Let me clear all my drawings on here. Remove 5 drawings. There we go. Okay. So when AMD went down by 50% from its highs, okay, let's draw it on the chart from here, down and down and down. When it was down 50% from its highs, actually went down even lower than that. Do you think a 50% gain gets you back to break even? I would say no. Why? Because if we go up 50% of that, it's only halfway. A 50% loss going back up 50% only gets you halfway. The best way I can describe it is if you have a $10 stock and it loses 50% down to $5, that's a 50% loss. We all agree with this. A 50% gain from $5 is how much?
$2.50.
$2.50. Does that get you back to break even, Deep Thought?
$7.50. So you're still 25% down.
Exactly. That's why when you reach that 50% loss, you have to have a 100% gain to get back to break even. And it's not like hearsay. It is actual math, right? 100%, 50% loss requires a 100% gain to get back. Losses work against you geometrically more than winners do. Now, let's look at a different stock. Let's go to AMC. Instead of AMD, let's go to AMC. Oh, this is so brutal.
Ouch.
Oh, my gosh. Hang on.
Ouch.
Let me keep zooming. This Did they have a reverse split too? Jeepers creepers. Okay. Now, from the peak of this, says $394. The current price is $3.14. So we can infer that that's a 99% loss, right? A 99% loss. I'm not saying people are held onto it, but there are people that have held onto it. Just a fact. Now, how much would it have to go up to get back to that all-time high? All right, it's now 99%. It has to go up.
For 1,000-something%.
1,000.
No, not quite.
18,000.
18,000%.
18,477.
Look at JC over there. He's like, oh
To
my
the
God.
moon.
A stock that you decide, you know what, I'm just going to hold it. Who cares? A stock that you're letting just drop. I don't care anymore. I'm just going to let it run against me. I have no more risk management on the trade. I can't lose anymore, right? Dude, you realize to make back that loss, your stock has to now go up 18,000%. Unbelievable numbers here. Do we see why losses work against you geometrically more than winners do?
Yeah.
I would love to have an 18,000% gain. Those are really hard to find, though. Just like almost impossible if you had to guess. But you could probably find lots of stock that have gone down 99%. I'm sure that that's a lot more frequent occurrence than a stock going up 18,000%, which is why all stocks are bad. And every once in a while they act right. Let's continue on here. Now, the thing is that for those of you who don't know who Mark is, one of my mentors, one of the market wizards, I have several posts that Mark has put out over time because I feel like he does an amazing job of putting himself out there in a way that he doesn't have to do this, right? Dude could disappear, kind of like I want to do one day. Dude could disappear and you'd never know, okay? But he puts out these posts, right? And he wants to, in this particular one, talk about the future, right? Like I issued that challenge earlier. Find a way to tell me how I would have known these losses were going to happen before I put the trades on. Before. Those who ask me where the market will be in a year or at what level the S&P 500 will bottom totally misunderstand what it takes to be a great trader. Meaning, like conceptualize this, right? For those of you who followed along on my trades like SM, which is super sucking right now. I'm getting monkey hammered in this trade. And there's nothing that I could have done to know this ahead of time, right? Again, the challenge has been issued. The gauntlet has been thrown down. If you can find how to tell me on this candle how to know it's going to be a loser, by all means, please do so. But until that day comes, I'm in the business of responding, not prediction. Telling the future is impossible and unnecessary. Trading is a now business, right? Now, let's also conceptualize what he means by a now business, right? On this date right here, when we got in the trade, all we could see was this candle. In fact, let's go back to replay. Let's go back to replay. Here. Okay, cool. Now, we're looking at this trade. This is such a great teaching tool. I'm so glad this exists, right? We're looking at this trade right here. We can't see the future where it's going to go. So we're going to buy one, right? Here's what it is. And then we click play. I think that's what I want. The next day comes. I just got to move this out of the way. The next day comes. The next day hasn't come yet. The next day comes at some point. There we go. And it's like, oh, look at this. I'm in the what business? I'm in the what business? Come on, guys.
Trading is the now business.
The reaction business. Yeah.
I'm in the now business. Yes,
Yeah,
I'm in the now business. Looking at this right now, do I have an exit signal? No. Do I know what's going to happen next? No. Let's go to the next candle. Okay, cool. I'm in the now business. What do we see now? Right? Do we see an exit, a reason to get out here? No.
No.
Exactly not. Right? Now remember, let me go to this slide. Hold tight. I have a slide that I'm looking for. You know which one it is. I don't have any expectations of what the outcome is going to be because I can't predict the future. Right? I just have a plan to get out when one of my exit signals is hit. I have no expectation on the outcome. Another candle goes by. Keep training. Another candle goes by. Do I have a reason to exit? Potentially, right? Potentially. I mean, it depends on your stops, right? Maybe you want to get out at break even. Maybe you want to get out with a close under the prior day's low, whatever, right? I want to exit. And then, yes, now we have a very clear reason to get out. We have a very obvious exit signal. But at no point in time did we have that exit signal until now. At no point in time would we have that exit signal until now. Next, what I want to talk about, caution. But Chris, it must go up. No, wrong word. It should go up. It should go up from here, right? Next, I want to look at something Joe provided, which I'm really excited he did. And this is a huge lesson in discipline, a giant lesson in discipline, because I've seen this a lot in the Discord. People saying, oh, you know what? I'm not going to take the half ATR stop right here. I'm not going to cut my losers short. I'm going to let my losers run. Thinking, you know what? It's happened before. I don't know how many times the stock has gone up right after I got out of it. But that definitely can't happen like this. There's no way it can go down like this, right? This is another post from Mark. Knowing you should sell your stock when you get in and it goes down, but you don't because you're afraid that it's going to turn around and go up. This is such a common thing. It was so common that Larry Height and I, when we worked together, he spent 2 hours basically drilling in my head, learn to take a loss, learn to take a loss, learn to take a loss. I got really tired of Larry telling me this. Now, Larry Height is the very first billion-dollar hedge fund manager. Larry Height was an original market wizard. And fun story, Larry Height's nearly blind. But he could still be amazing in the market because he understood the power of learning to take a loss. Now, if you don't take your loss, can you get lucky? Yeah, absolutely you can get lucky. And it turns up and it goes with you. Yeah. But the problem here, and Dave would tell you this too, I think I've even heard Dave say this, is that it teaches you the worst kind of habits. The kind of habits where you're ignoring risk when it's staring you right in the face. It's like stepping into the ring, like JC was saying, and getting punched over and over and over and saying, you know what, I'm not going to duck and weave. I'm not going to do whatever fighters do to get out of the way. I'm just going to keep getting punched in the face. I'm sure one of these I'll get lucky. I'm sure it'll happen, right? Yep. Dave, what's up?
I just wanted to throw in here because it's a good example, actually, if you go back to that slide, that one. Okay, I'm a pilot, have been for years. Jorn, I believe, is another member pilot here. You don't train for clear weather. You don't plan for clear weather. You train for the failure. When you get out on a runway, before you advance the throttles forward, you better have in your mind, where am I going when I lose this engine? And if it doesn't happen, awesome. Man, you're off to a great start. But if it does, you have already gone in your mind to that place and know what your plan is. If you just sit back and I don't have a plan, well, you're going to flounder. You're not going to have that exit. You're not going to know, hey, if this happens, if X, Y, and Z happens, I'm out, done. You know, you've got to have these plans built in, and it applies to everything. The body will go where the mind has been. Your trades will go where your plan indicates. You know, you save it or you don't. You cut the losses and you move on. But you got to have the plan ahead of time. Otherwise, you look like that bottom one crashing into the Grand Canyon.
Speaking of, let's look at some of those that have crashed in the Grand Canyon, right? Let's look at SMTC. Now, this is a trade that I took a while ago, and I got in and I got out because it hit my stop, right? And what happened later on? It went up. That's part of the game. You're going to have to be okay with that happening. If you really are that set up on it, if you're really that disappointed by it, buy back in. If you really feel that strongly about it, you can get out and then get right back in. Okay? Now, I wanted to show this to you because it does happen. Where I'll get out because I follow my risk management and my plan, which is not going to be the same as yours. And then it goes up without me. And I'm fine with that. But then there's other ones where I got in, I got my exit signal, and then it did exactly what we're talking about right here, right? There was probably somebody still holding on to Frog, which is such a goofy name, but they were still holding on to Frog saying, well, you know what? Last time in SMTC, I didn't get out and it went up, right? So clearly I needed to follow the same logic with Frog, and they're losing their ass. Then there's some like NVIDIA, right? NVIDIA, I'm probably the one person on earth who's ever lost money in NVIDIA, right? I'm the first one to say that because it got past my stop point and I got out. I followed my plan to a T, perfectly executed. And man, it went right back up without me. It did. It certainly did. But then there's ones like Civi, where if you didn't take the stop, now you're really hurting. Now you're really hurting. All that you have to do is follow your plan.
Chris,
Mean that every time you get out, it's going to crash down? No. Stop thinking the world revolves around you. Don't be such a narcissist. Okay. If it's working, let it work. If it's not working, get out of the way and just understand that there are times where it will go up without you, but there are also times where it will get absolutely dominated without you. Right? This stock got monkey hammered to death after I got out. If I were still holding it right here, I'd be hella pissed. I'd be pissed at myself because I let that happen to me. Okay? Now remember, we cannot control the outcome of the trade, but we can control exactly where we're going to get out. Joe actually went through and he did this analysis already, and he said trades that would have profited after the stop. There were 14 trades. You know what? They went up without us, and that's fine. Trades that would have continued with more losses within the contract expiration. There were 19 examples of that. So without putting any numbers to it, like I don't know what the percentages were or whatever, and it doesn't really matter. The point is that either one of these can happen. It can go up without you. It can go down without you. We can't control that. That is outside of our realm. And if that's too difficult for you, you probably shouldn't be a trader. And I mean that in the most low possible. If you can't come to this game and just be content with the fact that you don't know the future, that there will be times where you get out of a trade and it goes up, there will be times where you get out of a trade and it goes down, you're not going to be in this game for very long. Be content with the uncertainty of it. Understand that this is how the game is played. JC, what's on your mind?
the one that went up without you. Why did that happen? Were you on to other trades? Did you not follow this?
Oh, that's a great question. When I get out of a trade, right, like from here to here,
boom,
I got out and I just take it off my radar. Right, the buy signal happened back here. I'm only looking at a today's buy signal or yesterday buy signal.
Got it.
At this point, that one's probably 4 days old.
Out of sight, out of mind. You're not following it because you're not sitting there watching everything you bail out of.
Exactly.
Got it. All right. So beautiful. Perfect.
JC, there's so many things in this game that will mentally wreck most people. They'll just eat them alive, right?
Yeah, I don't get that. But I understand it. Look, there's a lot of people. My mom can't stand to see MMA. You know, some of my buddy friends from Argentina, they play soccer. You guys know how soccer in Argentina is. If I come within 3 feet of you, I'm going down. I'm going, you know, it's the whole thing. And they look at MMA and they go, God, why did they hit him so hard after he's down? They don't understand it. They go, brother, this ain't for you. Go play soccer. This ain't for you. So I just don't, I don't pay no mind to those people that are freaking out. I don't even go on the Discord, on the general chat. I got to admit that I do like Charlotte and you know, the discussion of philosophy and the different authors and, you know, and deep and all that. That's cool. But, you know, I don't even go in there and even mess with that because that's like arguing with people that want to discuss why you shouldn't get hit in the face. Mm-hmm. Done. We're not talking.
Yeah. You know, JC, we actually created a brand new channel for those people who need a little bit of therapy. They want to vent it out. They feel like the world is all against them. We created a brand new channel just for them, the Frustration Station. And it is awesome.
Yeah, I like that name. There was another one there that I like too, but I like that name.
Yeah, we created the Frustration Station, and people are actually going in and venting their grievances there. Like it's what was that thing on was it Seinfeld? What holiday was that? Was Seinfeld's dad? Where the airing of grievances?
Festivus.
Festivus, yes. Yeah. This is the Festivus. Everybody gets to air their grievances over there, right? And that's what it's for. And people are actually pointing that out and say, listen, if you can't mentally prepare yourself to be in this, go vent it out in the Frustration Station. Right? Of course, I would love to give you 100% wins. I would love to do that, but it's just not reality. Listen, if we had 100% wins, we would be talking about it right now. I'm just saying, I would be off on my own private island, and I would not be keeping a list. That's for sure, of anybody on that island, if you catch what I'm saying.
Yep.
So let's go close some trades. I'm going to do this a little bit different today. I'm going to pull up my, where's it at? In the, oh, hang on, you can't see my screen anyway. In the Outlier trading room, I went through and I said, I need to exit SM, I need to exit Oxy, and I need to exit EW. For the sake of, I want to hang out with you guys more and get more done, I'm going to go exit all of them on my other screen as fast as I possibly can. And that way we can get back to working together. So I'm going to start with, and part of it too is that I want to see if it actually makes a difference with everybody else watching me trade live versus doing it on my own. Yeah, I think it does, because I just filled one right away. You don't know which one I filled, but I just closed one right away without any issues. I'm out of EW at 620. Yep. Okay, this is real. The outlier effect is real. I'm going to have to start just slightly ahead of you guys. I'm out of EW at 620. What am I closing next? And I'll alert the Discord later on. You know, this is fun, actually, being able to make my trades without having to wait to get filled. Okay, I'm out of Oxy at 78. And closing the last one is SM. Oh, now I have to wait on that one. Okay, now people are starting to catch what I'm doing here. Hang on. All right, out of SM at 235, which gets me almost all the way back to cash. I need to go buy some SGov. I'm out. I'm out of everything. I'm out of everything. On purpose, I didn't share that as we did it. So I'll go put those trades in the Discord after we're done here in Outlier U. Now that's the reason why you need to come and watch live for sure. Let me go buy all the SGov that I can. All the SGov they'll sell me, I need to go buy real quick. Hold tight. Oh, that's the wrong button. There we go. Hold tight while I buy some SGovs. So what I like to do at this point is I like to look at my cash value and then divide by the SGov price. SGov price is at this very moment 100.53. That's going to give me a number of shares, and then that's what I buy. It's not that complicated. Hold tight. Got to do it in my account and the family account.
So you just checked what you freed up, the money you freed up, because you're going to invest that money.
Exactly.
Got it. Perfect.
Yep. And so I'm going into both of my accounts, and I am buying literally everything down to as little as I can to be in like physical cash that's not filled with anything. So for perspective, my family account has $7.88 in cash left. Every other dime is in SGov. My account has $62.64 left in cash in it. Everything else is in SGov. Now, why SGov? Dave, tell us why SGov, please.
Turn my microphone on here. It's exposure to the basically the 3-month T-bills. Pays interest, pays it every single day. It's liquid. You can go in and out of it, capture the interest on 1 day or 30. It doesn't matter at all. If you want to leave it parked in there, you can get a dividend at the end of the month. If you don't cash out, it's just equal to whatever you would be in. You'd be cashing out anyways. So works great, but at least you're making I believe it's 4.61% right now on your money, just sitting there. So you're earning money while we can't be earning money.
Exactly. And this is such a brilliant tool, and I wish I'd known about it years ago. But the strategy that Dave taught me, and Dave is a super smart dude, as you have seen. Dave teaches me stuff all the time, is buying it at the first day of the month and then selling it on the last day of the month. And as you'll see, if you zoom out, it just goes up and down, up and down, up and down, up and down, up and down. Now, the reason that we close at the end of the month is because that eliminates market risk. What I want to show you is this. If you zoom out far enough, you can actually see how SGov was a smaller range and then grew as interest rates were growing, right? Now, It has been in this $100.20 up to about $100.70, give or take, for several quarters now. But at some point, it will start to come back down. I don't know when that point is. I'm not willing to take a risk to find out when that point is. So by buying it any time in the month and then selling it on the last day of the month and then buying it back the first day of the month, you eliminate market risk. Why? Because if it's at $100.34 this month, and then at this month it's at $100.36, and then at next month it's at $100.30, right? Depending on how many shares you have, that can be a decent amount of market risk that you don't have to deal with at all, period. So you buy it any time of the month, sell it out on the last day of the month, and then rebuy it back. If it's the last day of the month is on Tuesday, the first day of the month is on Wednesday, buy it back that Wednesday. Now, why does it look like this? I'm going to ask one of our gentlemen in the chat. Let's hear from Brad. Brad, I hadn't heard from you much lately. Why does it look like this? This looks weird. What kind of chart is this?
You mean why is it going up and then dropping?
Yeah.
From what I know and from what Dave has taught me is that at the end of the month they pay off the dividend of it. Is that right?
Yes.
So they pay off the dividend, and then I'm jet lagged. Pay off the dividend, and then they get the and then the price resets depending on what percentage the dividend was.
Good answer. Good answer, right? Every month, SGov pays a dividend. And every stock also that pays a dividend looks somewhat like this as well. When it pays its dividend, it goes down by the amount of the dividend. So you're basically accruing the dividend all month, and then it goes down by the amount of the dividend. Now, the reason that you want to get out on the top and get back in at the bottom also is when it's 3 or 5 days later, whenever they actually pay the dividend into your account, they pay it as cash, right? Maybe it's another $500 in cash at the end of the month that you didn't have. You still have to go buy SGov at that point. So you're basically removing that waiting period and getting right back into SGov to earn even more. You actually can earn slightly more because you're getting it, let's say that $500, that's five more shares of SGov that you're earning on several days earlier. Everybody got it? Any questions from gentlemen here in class?
How come I can't find the SGov on Outlier?
It's, you know what? I don't know why it's not an outlier, but
probably because it's a bond ETF. It doesn't officially move or swing. Yeah. I mean, well, I would assume Mahesh would have eliminated it out of the list just because of what it is.
It's on what do you call it? It's on Fidelity. So there's a reason why it's not on.
Yeah.
Okay.
I mean, it's really not a tradable vehicle. I mean, JC, if we really zoom in on it, it moves about 20 cents between, or maybe 40 cents at the beginning of the month to the end of the month. Not much you can do about that. That's the interest that's being deposited on a daily basis. Yeah. So there we go. All right. So I'm all the way in SGov.
Why don't you put your cash in some kind of a bond that most brokers will have? You'll get 4%.
Because in that case, you actually lock up your money in a bond, right? Mm-hmm. Let's say it's a duration. What this is doing is it's taking the average rate from the 0 to 3 month bonds. So if you wanted to do that, it's basically like going to your bank and buying a CD. I'm buying this bond for 3 months. I'm going to earn the interest for 3 months. I can't do anything with that money for 3 months. But in SGov, you're going to get paid pretty much equivalent the same interest on a daily basis. And you can withdraw and work on it right away. So it's really it's a capital efficiency thing, right? Am I locked up for 3 months, or can I earn interest and still treat it as if it's a deposit account in and out?
Okay.
Yeah, it's a really good question, by the way.
Right.
Mm-hmm. All right, let's get back to the lesson here. All right. So stocks don't always go vertical the moment you buy them. I know this is a big shock to a lot of people out there. Stocks don't always go vertical the moment you buy them. Sometimes they do. Like Mike, you had a trade in Dollar Tree recently, right? That was pretty great. How did that feel? What's one word to describe how it felt to have that trade just work? In fact, let me go to it real quick. I didn't take that trade. I wish I had.
I'm going to say positive. How about that?
Yeah. Look at this big, beautiful trend on Dollar Tree. It's amazing, right? The word that I would have used is effortless. Right?
Oh, yeah.
Here's the thing, Mike, right? Your entry here on this trade looked almost identical to the entry in the ones that we just got out of, right? Let's see, like SM, right? Because it was in a bullish trend. It had a buy signal, had everything working for it. But one of them did a lot better than the other. And that's what I mean is that we don't know which one is going to work. We don't know what the outcome will be. And we can't set our expectations on that. But you tell me, you just went through this. What was it like?
I just thought it was great. When I figured up the percentage gains on it, because I've had some hits, but I'm sticking to the plan. And one thing I got to say, Joe gave me a little pep talk in the Discord by looking at the chart, saying what was the account impact, and it was really pretty minute, just nothing really. So that kind of, I was okay, yeah, this actually washes out pretty nice. So I don't know. I like the way the Dollar Tree looks because that's just a nice strong sweep. Some of those that we get in, I have this funky, and it's a psychological thing where I'm looking and they're doing this sideways dance. And I just don't like those. But there's no data to say don't do it. But I like a nice strong sweep.
Yeah, beautiful trend is what you're looking at. The big beautiful trend. Yeah.
Yeah, this one was exciting for me, Chris. I took it, and I don't believe you did. So that meant I had to follow the plan with no mentor, right? So I got to roll this thing 3 times for over 52% ROC, and I mean that felt amazing, right? To go out on your own off the reservation, have it successful, and to roll it 3 times. I was like, man, just 2 more rolls, baby.
Yeah. Dude, I love when a trade hits that rolling point, right? Because it's like, oh, I just booked some profits. This is awesome. I know this trade is working. I'm pulling up my stops to make sure that I don't let them turn against me. That's the best feeling in the world, right? And get to keep the trade on. Dude, I love that so much. Awesome. Super proud of you guys, especially because you ran that on your own. Now, let me ask you this. You're going to have to find ways to check your fear and greed. So what are some of the things that you guys do? I'd like you to tell me here in class and in the chat, what are some ways that you check your fear and greed whenever you're putting on a trade? Dave's a seasoned trader. Let's let Dave go first.
As soon as the microphone turns on. Well, obviously we have the outlier. I look at a lot of different factors when I'm looking to put on a trade. In the background here, I'm actually running a brand new strategy, testing out in the background as we've been speaking here. But, from a mechanical point of view, of course, I look at the fear and greed. I look, see, we're going up, we stalled, are we, pulling back? But I think you got to go a step further down. I think you got to look at the psychological. Why am I doing this? Am I fearful going into this trade? Look at the emotions a little bit. We talk about that in journaling. But I think that's, an extra step when you talk about fear and greed. Am I getting into this trade because everything lines up and it looks beautiful and it meets all the rules? Or am I fearing that I am missing out? Am I getting greedy? I think you can reverse the question around a little bit and look at it in a different way when you get ready to enter trades. Are you being clear, methodical, following rules? Or are you looking at the one going, oh, God, I wish I had taken that? There was one stock today, CYCC, 400% gain out of nowhere.
Whoa.
There were a lot of the groups out there talking about that and saying, oh my God, this is great. I got to jump in. Well, why? There was a lot of.
Know that was going to happen. Yeah. How could you possibly have ever known that would happen?
You're supposed to know that stuff. You got to know.
Yeah. It set, half a dozen circuit breakers off today as it was, doing its thing. But look at that, that candle right there, the fear, everybody, oh my God, it's up, $15, $16. Well, how would you feel if you jumped in on that because you were afraid you were missing out on the deal of a century, only to have it pull back $7 instantly?
Yeah. Well, let's look at the 5-minute chart because you're going to see on a 5-minute chart exactly what a lot of emotional roller coasters are looking like right here, right? People getting in, people like, oh man, this is the greatest thing ever, and then it starts pulling back down, right? From this high to now, somebody is down, guaranteed, over 30%, right? Somebody's down over 30% right now, and they're, regretting life because they FOMO'd into a trade. They probably didn't have a plan, and now they don't know what they're going to do, and they're going to hold it back to zero because that's what people do.
Yeah.
All right. I think Paul had an answer for how you guys work around the fear and greed. Was that you, Paul?
Yeah. So I actually started reducing my risk size. I went from 5 down to 2.5, just to make sure I understood the process and that I was able to follow the plan, because early on I took some losses because I was letting trades go down below the half ATR and just hoping they'd come back. Today I exited SM and Oxy right at the half ATR and saved a bunch of money.
Yeah. So Paul, you were saying that there were times not even all that long ago where you were holding and hoping that would jump like this and then it continued on down without you?
Right.
That's real, dude. And you've done nothing wrong, right? What you are doing is exactly what happens to most people. But we're not most people anymore. We're outliers, right? We have a predefined plan of what you're going to do in every situation. This is how I do this, right?
Yeah.
This is how I get over it. I don't care if a stock is going to do what a stock is going to do, and I'm not there. I don't care. Like Dollar Tree, man, I would have loved to have been there, but I'm not going to lose sleep over it. There are so many people who will literally lose sleep at night thinking about how their entire lives would have, how many Lambos they could have bought had they bought this stock, right? There are people who literally do that. In fact, when I was in my consulting job, there was a guy that sat next to me at one point. His name was Jeff. And I remember more than one occasion him saying, if I had only bought oil when this was this price, if I had only bought oil when it was this price. And he ruminated, that's the word. He ruminated on that for years. If I had only bought oil when it was at this price, but you didn't. You're going to have to get over it. You didn't, and that's okay, right?
Wow. It's like Napoleon Dynamite, the guy that plays football. If the coach would have put me in.
That's exactly it. Yes.
Oh, God.
Now, another thing that I like to do is run lots of Monte Carlo simulations. I love running Monte Carlo simulations because it gives me that reassurance that I'm on the right path. So let's do one right now, right? Let's do one right now. My win rate is 50%, if you can believe that. My win rate has gone down to 50%. I'm not happy about it, but it's part of the game, right? My average win is still nearly twice as high as my average loss. So I think I'm going to be okay. Just guessing. 44.55. And then my average loss is 24.57. And if I hit run, the reason I like to do this so much is it's a random set of scenarios, right? I don't know what's going to happen, but I do know that even in my worst case outcome, I'm still wildly profitable. Still wildly profitable. But here's the thing that we forget about. Even though you can be wildly profitable in your worst case scenario, this still has a 11 trade losing streak. An 11 trade losing streak. How would that feel to go through an 11 trade losing streak? I'm going to call on somebody. Deep thought. How would it feel to go through an 11 trade losing streak?
It would suck. It would suck hard. Yeah.
It suck real hard. You're not wrong at all for feeling that.
Yeah.
What do you think, Brad?
Been there, done that. You know, I mean, you were talking about how to manage your fear in this, you know, in any environment, you know, as far as trading. And my thing would be just watch us, because I used to have that 11 in a row, you know, loss. Started watching, you know, started learning, started figuring out that, you know, you are going to take some losses, but then with the wins, you know, it gets better and better, and you don't have anything to fear once you have your plan set up.
Exactly. Joe, what were you thinking?
I was going to say one of the ways I get around that worrying about the loss piece is I just take it off my radar. I've actually found that once I remove something from my TradingView watch list, I don't even remember it. Somebody will be talking about like DT or whatever, and I'll be like, I don't even know if I traded it. I got to go back and look.
Yeah.
You take it off and go for a walk.
Yeah.
Yeah.
And actually DT's told me that before. Just take it off. Just go outside, go for a walk
Go
the
touch some
dog,
grass.
go touch some grass. Yep.
Dude, like,
You
I don't
know-
know about you, but my wife tells me all the time about how I can't remember anything. That is such a blessing when it comes to trading. Oh
It
my
is.
gosh, it's the best blessing of all time.
Yep. Trading and
Yeah.
pitching.
Yeah.
You know,
But
if you got-
I've tried what Paul mentioned a minute ago about reducing risk when you're not really feeling comfortable, or if there's just some signal that just doesn't feel right. I'll go in with like a 1 or 2% risk, and if it fails, it fails. If it does, great. I still win.
Exactly. So, like, as fun as it was to have those winning streaks, we still are going to have those losing streaks at some point. And that's what we're in right now. And that's okay, because we've had several of these already, right? That's part of the game, right? Having that positive edge, right? That positive edge means that on average, this is my average outcome. If it's a win or a loss or anything else, on average, that is what my outcome is. And because I have that in my back pocket, I don't stress. I don't stress at all. You've heard me say so many times, my worst case scenario is that I'm going to be wildly profitable, and I'm okay with that. So number one, how I would deal with that is having a predefined plan. Number two is running lots of Monte Carlo simulations, right? Number three, remember, we're bucking the trend of human evolutionary behavior. Now, what in the wide world of sports is Chris talking about here? The smartest man I know, Mark Gariski, our chief strategist here, put out this post on our Discord. And he said, what we're asking you to do, set aside emotions and stick to a plan, is an unnatural act. 200,000 years of heuristics and human and behavioral evolution have taught us to flee at the first sign of danger or pain, but in the markets, that is a surefire way to dwindle your account down to zero. Sometimes military or police will have the saying along the lines of, we're different because we will run toward the gunfire. It may seem counterintuitive, but to succeed in trading, you have to be different in that same way, right? I don't mean to sugarcoat things. Taking a loss always sucks, but it is an inevitable part of the process. So what we're doing here is the reason that 90% of people blow out 90% of their accounts the first 90 days of trading. They can't do what we're doing. They cannot do what we are doing right now. And I like to say this all the time, right? 50% of the people are going to watch this passively. They're not going to learn anything. 25% of people are going to watch this. They're going to take one trade and it's going to be a loser. And they're going to say everything that I've heard in the last week, right? This guy doesn't know what he's talking about. You're literally the worst trader on the internet. We should have an inverse outlier ETF. The other 25%, they're going to be making money like you guys have been, right? I know several of you guys in the group have put up amazing profits this year. And we're not even through Outlier University. We're not even through it. And you have figured out what it takes to be a profitable trader. And it all leads down to people being scared to take a loss, right? They're scared to book the loss. But here's the thing. The loss has already happened, right? The loss has already happened. Let's go over to SM, right? The loss happened on this candle. If you choose not to take that loss here, you could end up like Civi, where you're going to be taking an even bigger loss here. You can end up like Frog, where you're taking even bigger loss down here. The loss has already happened. You get to choose how big that loss is, right? Probably the most handsome man I've ever seen on the planet wrote this tweet one day when he still used Twitter. Today is the day to take the opportunity to turn your small losses back into cash. Which is exactly what I did today. Man, what a handsome guy. Give me incredible information like that, right? Do this before they become big losses. Don't let this opportunity pass you by. Today's the day to take that opportunity. Don't let it pass you by. Mark, one of my mentors, there's no shame in losing money in a stock trade. Not at all. But to hold on to a loss and let it get bigger and bigger, or even worse, to buy more, is amateurish and self-destructive. That's because a lot of people get lucky one or two times, and then the third time, it's gone. All of that luckiness is gone. They are unlucky AF. Now, I think Deep Thought, did you post this? Somebody posted this on our Discord. I thought it was Deep Thought, but it could be anybody. This is from, I think I forget where it is, but what's the reason for not taking a loss? I argue there's one reason to tell ourselves there's another real reason. The real reason is always the same. I'm letting my loss run to avoid pain. I'm letting there's twice on there. Oh, for a different thing. Conscious reasoning, I'm hoping it comes back to avoid pain. This indicator says so to avoid pain. I'm taking my profits. You can't go broke taking a profit because you want to avoid the pain of watching the profits disappear. I'm winning, so I am reducing my stake. I want to take it easy now, is what you're saying to yourself, but really, you're trying to avoid pain. I'm losing, so I'm going to increase my stake, which is a terrible idea. I'm trying to get back where I was to get rid of pain. I made my points for today, so I stopped, meaning I'm afraid to lose what I've already made to avoid pain. And then lastly, I'm trading without real conviction. Means, or this is what the person would say, I'm bored or scared of missing out to avoid the pain of boredom or the fear of missing out. This is so real.
Yeah. Hey, Chris, you're missing one on that list, or Deep Thought's missing one that I always love to hear. I'm holding it as a loss because of taxes.
Yeah.
Yep. Because I don't. Hey, you know what? It would be great to have wins, but I'd rather have a loss. So at the end of the year, I have less money in my account than I would have otherwise. Dave.
Right.
Like, I don't want to pay taxes. Taxes are the worst. I'd rather have less money.
They're horrible.
That's asinine.
I'm gonna make less money, so I make less taxes. I pay less taxes. Yeah, great.
Yes, Dave. Actually, that's a really well said one. I'm glad you mentioned that.
Gents, I gotta get out of here. I got a fighter that fights in 10 days for the biggest fight of his life. It's a tough one, but
Awesome.
Good luck, Johnny.
Good luck, my friend.
Good luck.
yes, sir.
Cheers, Jesse.
Let's finish this lesson here, fellas. I always say that you could publish the rules in a newspaper and nobody's going to follow them. The key is consistency and discipline. What we do on a daily basis is the consistency and discipline to be successful, right? Everybody looks at the end of the game and says, wow, look, the Lakers won. Wow, look, the Texas Rangers won the World Series, right? Wow, look, the Cowboys won the Super Bowl. That's how far back my sports knowledge goes. Now, looking at this today, we didn't see every play that they made, right? When the Cowboys were playing the Buffalo Bills back in 1992 or whatever, we don't talk about every play, right? We don't talk about how Emmitt Smith ran 5 yards. We don't talk about how Troy Aikman got sacked. I don't know sports. This is the limitation of my sports references here, okay? We don't look at every single play that happened. All we care about is the scoreboard at the end of the game. So many people are fixating on what is happening on every single play and forgetting the goal is to have more money at the end of the year than you do right now. And by hyper fixating on each individual move, they're causing so much additional stress and emotion that they don't have to have otherwise. Now let's wrap this up by going through Mark's 6 key trading rules. You've heard me say this one before, but if you don't have a trade, if something doesn't set up, how long should you wait in cash?
As long as it takes.
As long as it takes.
As
Over
long
long.
as it takes. Right. Wait in cash for proper setups as long as it takes. Sit in cash and don't F up as long as it takes. And yeah, it's boring. And yeah, it's frustrating. But now at least we're earning money with SGov. Number 2, always trade with a stop loss. You want to keep your losses small. What's something you guys do in every single trade?
Determine the stop loss.
Precisely, because you don't know how far it's going to go up, and you're not gonna cut that off, but you know exactly how far it's going to go down before you cut off the trade. Next, never get bold when running cold. What does that mean to you?
Reduce risk.
Reduce risk, yeah.
Yeah. Risk profile.
I would say don't revenge trade, right? That's how I read it, right? If things aren't working for you, now is not the time to be doubling down, to be getting more aggressive. If it's not working for you, that's the mark. I said this at the beginning of the video here. That's the market telling you something's not working right. And if you force it, you're asking for more trouble.
Mm-hmm.
Next, nail down decent profits, right? Of course, not every trade is going to be a winner, but you want to take the profits when they are there. And you do that by having the exit plan. Having the exit plan so you can nail down those profits. Number 5, never let a good-sized gain turn into a loss.
Yeah.
Never let a gain turn into a loss. Can it happen? Yes. Right? That happened on SM, right? It was a small gain that turned into a loss. Right? Unfortunately, The one candle that told us it wasn't going to work was the one that had the loss. Could we have seen this ahead of time? Of course not. Go ahead, Joe.
The first time you showed this earlier, we had a question in the chat about ATRs and rolling. So I think the question was, why do you not roll at half ATR? Do you have a reason for that?
Just more work, right? It's just like if we rolled every half ATR, we'd roll 6, 8, 10, 12 times on a trade versus 1, 2, 3 times. You can do that by all means. But of course, you're going to incur more slippage because you're going to have a little bit of bid-ask spread you got to deal with. You're going to have more fees if your broker's going to charge you some fees. You're going to have more transactions that you got to keep up with if you're keeping up with that. Can you do it? By all means, if that fits in your trading plan, I say go for it. But for me, it's just extra work. And I'm only going to use the 1 and 2 and 3 ATRs as that trigger. That doesn't mean that it's wrong. It doesn't mean that a half ATR is wrong. It just gives me the green light, basically, to make that move happen. Good question, though. Then last one on here, never add to losers. Never, ever, ever add to losers. And in fact, this is what a lot of people do in trading. They say, well, let's go to the advanced money destroyer. Well, I love the stock. I love the CEO. I love everything that they're doing over AMD. So I'm going to buy it all the way down as it goes, right? And so they buy here. And they're like, oh, I'm gonna add to my losing trade. Why is this not clicking? There we go. I'm gonna buy it here, and then they're already losing because it's in a downtrend. So they're gonna buy more, and they're gonna buy here, and they're like, that's okay. If I bought it at, what was that, 124, I bought it again at 117. It's okay. I'll just buy more at 107, and then you know what? I'll buy even more down here at 100. And then as it starts to go up, they're like, oh, finally, if it ever goes back up, right? Because remember, you started buying back in December and only in May of 2025. So it took you 6 months to even start showing profitability as you're averaging down. But if you had bought at the exact same place as it's crashing up versus crashing down, your average price would be the exact same average price. It's really, really hard for a lot of people to understand. If you buy it over here on its way up, your average price is still the same as if you bought it over here. The difference is that you're to profitability that much faster. That much faster. And listen, this is so common that even one of the best traders ever, Paul Tudor Jones, had this written on his wall. Losers average losers. Do not be trying to average losers ever. Now, real quick, this is going to be a short section here. You can always adjust your trading plan. That's why I've thrown out the challenge. Find a way to improve my trading plan. I want you to tell me before I put the trade on if you can find a way to know ahead of time. Find a way to improve my trading plan. That's okay. Find that. But always look to improve your expectancy. You need this formula here. Expectancy is your probability of win multiplied by your average win, subtracting, minus probability of loss times your average loss. This is the formula you need. We've talked about expectancy before. This is the formula for trying to figure out how profitable each trade will be on average. If this is greater than 0, that's a great system. It's a profitable system. If it's less than 0, it's not a profitable system. You need to go back to the drawing board. And by having a baseline of this is the number of trades I put on, this is what I've seen in my expectancy, now you can compare. You can say, okay, if I add this thing, how does it change my expectancy? Does it improve my expectancy or decrease my expectancy? And one thing Joe and I worked on about a month or so ago was he had a really interesting idea, and I back tested it, and so did he. But the number of occurrences went from like 50 down to 5, right? While it may have been better expectancy, if I'm only trading 5 times a year, I'm not going to make as much money as I am 50 times a year with a slightly worse expectancy. Does that make sense? Because it's the average return on each trade. So even though the expectancy was slightly higher, if my frequency drops by 90%, it's not worth changing to. So it's okay to change your plan, but just figure out ways to improve that expectancy. Last slide for Mark here. Pros focus on managing risk, implementing processes, and maintaining the discipline needed to consistently execute their plan. Consistency and discipline sounds similar. Knowing that if they get those right, the money takes care of itself. right? It's like, for example, let's say you're trying to lose 20 pounds, right? Let's say you're trying to lose 20 pounds. Hoping and praying and wishing the 20 pounds is going to just fall off your body. It's not going to happen, right? Brad, the last time you tried to lose 20 pounds and you just like hoped and prayed it would come off, did it work?
No, I still have it.
No. But if you followed the plan of, I'm going to eat X number of calories, I'm going to get this number of steps in, I'm going to make sure I go to the gym 3 days a week, and your goal no longer becomes X number of pounds. Your goal becomes, I'm going to follow my plan for 100 days straight. Do you think you're going to lose at least a few pounds?
Yeah, absolutely.
Yeah.
Yeah.
And it's not about the outcome. Remember, never is it about the outcome. It's about the processes and plans that you're doing ahead of time that should guarantee you the outcome. That's a great place to stop right there. Do the processes ahead of time that will guarantee you the outcome that you're looking for. So guys, this was a big lesson. I hope that was useful to you.
Yeah, always good.
Yeah, absolutely.
Apology.
Yeah, for sure. Do me a favor, guys. If somebody's looking to save time, make money, and start winning with less risk, what should they do?
Man.
Click one of
There
these.
you go. That's a perfect answer. You guys have a great day. We'll talk soon.